The banking sector has been experiencing a chain of events starting with the collapse of Silicon Valley Bank and Signature Bank and the merger of Credit Suisse and UBS, which has created ripples in the industry. One of the largest banks in the European continent, Deutsche Bank, is now under the spotlight due to UBS's complete write-off of $17 billion worth of additional Tier 1 bonds of Credit Suisse. These bonds are riskier than traditional bonds issued by banks to raise capital, as they have high interest rates, and the interest payments are subject to the bank's financial health. These bonds can also be converted to equity in case the bank fails to service its debt. The write-off had impacted the credit default swap rate of Deutsche Bank, which had increased above 220 basis points, the highest since 2018. The premium for Credit Suisse's CDS had skyrocketed to more than 10%, indicating that the bonds were worthless. Apart from the additional Tier 1 bonds write-off, the mass panic in the European market can be attributed to several factors, including legacy issues faced by Deutsche Bank, German regulators' failure to prevent the fall of Wirecard, and the similar track records of Deutsche Bank and Credit Suisse. To determine if there are any fundamental issues with Deutsche Bank and its financial health, we will compare 7 key financial factors between Deutsche Bank and Credit Suisse from 2018 to 2022 to gain a better understanding. The first factor is net revenue earned from all business segments. Credit Suisse revenues remained stable from 2019 to 2021 but experienced a sudden 34% drop in revenue in 2022, from 23 billion Swiss francs to 15 billion Swiss francs. In contrast, although Deutsche Bank faced a slump in 2019, its revenues increased steadily between 5 to 10% from 2020 on a year-on-year basis. The second factor is provision for credit loss. As both banks follow IFRS as reporting standards, this specific item should be presented in the income statement as an expense, which indicates the loss expected by the financial institutions arising from their business operations. Credit Suisse recorded a historic provision of 4.2 billion Swiss francs in 2021, factoring the failure of Greensill and Archegos Capital, which was approximately 300% more than the 2020. Deutsche Bank's provision for credit losses also seems to be volatile but was split across all business segments. The third factor is profit or loss before tax, which is a more accurate representation than profit after tax because taxes can vary for different countries operating in Europe. Credit Suisse had a downfall, generating 4.7 billion Swiss francs in profits in 2019 but experiencing a 3.2 billion Swiss francs loss in 2022. In contrast, Deutsche Bank had a turnaround from a massive loss of 2.6 billion euros in 2019 to a 5.5 billion euros profit in 2022, in line with steady revenue growth from 2019. The fourth factor is the cash balance held by both banks, which indicates the bank's liquidity position, and a decline would represent customer panic withdrawal as a ripple effect from SVB. Deutsche Bank's cash balance was steady between 140 to 190 billion euros from 2018 to 2022, whereas Credit Suisse's cash balance increased almost 65% from 2018 to 2021, but in 2022, the bank lost more than the cash balance gained in the previous 5 years. The fifth factor is loans disbursed by both banks. A bank's significant portion of the revenue comes from the interest income earned from loans disbursed, and hence the growth in loans over the years should be a healthy sign for the financial institution. Credit Suisse's loan book dropped 10% in 2022, while Deutsche Bank steadily increased from 400 billion in 2019 to 484 billion in 2022. The sixth factor is customer deposits. Though customer deposit is a liability for the bank, increased customer deposits could help the bank disburse more loans, which in turn increases the bank's revenue. Credit Suisse had a stable deposit from 2018 to 2021, but in 2022, the bank lost roughly 40% of its deposits due to bankruptcy worries. In contrast, Deutsche Bank's customer deposits increased gradually from 564 billion euros in 2018 to 621 billion euros in 2022, indicating increase of customer confidence in banks' prospects. The final factor is the loan-to-deposit ratio. Loan-to-deposit ratio is one of the important metrics for the bank because it shows the balance between deposits accepted from customers and the corresponding loans disbursed from those deposits. The ideal percentage of this ratio should be between 75 to 90%, because if banks had disbursed less than 75%, then banks have a lot of idle cash sitting in their accounts without any earning capacity, but it should pay interest on those deposits. On the other hand, if the bank has a ratio of more than 90%, it may face liquidity crisis in the event of recession when most of its customers may withdraw their deposits. Deutsche Bank is maintaining a healthy ratio between 70 to 80%, while Credit Suisse's ratio jumped to 113% in 2022, indicating liquidity crunch as its deposits had declined. This is one of the reasons why the Swiss government had to inject capital as an immediate relief for its liquidity issues. Based on these factors, it is possible that Deutsche Bank is not facing the same issues as Credit Suisse. Although the credit default swap rate may increase due to overall market panic, fundamentally, the bank is financially healthy based on the financial results produced. However, investors need to keep a close watch on the entire financial sector because interest rate hikes may impact any bank, and any delays by regulators or the government to take appropriate measures may have a domino effect on the global financial system.